Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. Today we've got an extremely special guest showing up on the podcast. Today we have somebody who has been in markets for longer than I have been alive and has a wealth of knowledge in association with markets. He goes by the Crypto Sniper, the Market Sniper, and the Reset Sniper. Ladies and gentlemen, I present to you Mr. Francis Hunt. Thank you very much for coming on, Francis.
Hey, great to be with you, Ruth. Thank you for having me on.
Absolute pleasure. And the reason that I really reached out to you and wanted somebody like yourself on the show is not only have you got a wealth of knowledge in markets, but you understand all markets. You've got a really good view of markets across the board. And for a channel like myself that's very crypto eccentric, one thing that we've seen increasingly at the moment is a huge correlation between our market and the traditional financial market and everything that's going on. So I felt it would be amazing for my viewers to really, dive into some of the knowledge that you have, what your kind of outlook potentially is for this year with everything going on. Because it seems like there's a huge amount of uncertainty, and maybe you can help us kind of navigate some of these treacherous waters.
Thank you. Yes, I mean, as I mentioned to you before, nobody has all the answers. What we do know a little bit more about, if you've had sufficient experience, is cause and effect in terms of certain things that are happening in the markets. One of the things we kind of understood probably a bit sooner than others in the crypto space is that you should not become an outright believer. Believer as in this is freedom and liberty and there's the new thing. We're very fad orientated as in humans. We get excited, then we calm down, we fantasize initially, and we're super excited and it's all new and fresh, and then reality bites. It's like a new relationship, it's like a new anything. Eventually, it's still a thing and it'll have upsides and downsides. So one of the key things about our program and generally what we do is we try to avoid fantasies and belief systems. So I avoid using personally the word I believe in terms of association with me. I use the word belief systems when I'm referring to what I see other people potentially doing. But the highest executive center for you to work out of when you're considering investment and trading is dispassionate rationality. That means no matter how something good it looks, there's a dark side to everything. And that makes me sound like a super pessimistic guy who can find a dull moment out of the best times. But at the same time, in the darkest times, there's a silver lining to everything. So it's more about bringing yourself up when in a dark environment and bringing yourself down when it's all giddy love and light. So just from a mental posture and psychology, I would certainly suggest to people, don't evangelize. It's easy to get excited. We all got excited. I've got some pretty evangelical YouTubes about crypto at certain points as well. So we all get caught up to a degree in the wave. I don't want to put myself as the masterful exponent of all things. We're all human and we're all degrees. But what you find is the success in investing and in trading as well is going to be dictated by your relative lower volatility to wow, yay, boo, oh. The more you are as a net medium of the rest of the market more stable, inherently the more rational you'll be. Because there were some great moments for buying Bitcoin, for example, at the COVID lows at $4,000. I mean, regardless what we think of what it's going to do now, that's still a great return for 2 years from March. Don't forget, it literally is the anniversary of 2 years of that medical martial law-based event that we were all subordinated to. And as a result, being rational there, saying, come on, this thing isn't going away. It's here for a reason. And again, you mentioned in the pre-chat we had, I'm not evangelical. I don't think there's this benevolent individual that just coded up a whole new money system, disappeared, never collected his Oscar, his Nobel Prize, his various everything, never took a bow. You only have to look at some of the ego of some of the people that are putting themselves forward as Satoshi Nakamoto to say there's plenty of people ready to claim being this benevolent person. And I think that's been orchestrated. It showed up at the right time, the depths of 2008-9. There was an orchestration in creating the debt crisis that led to that. The whole game has been to introduce quantitative easing to create ever greater volatility and pump and dump schemes. This is the curse of central banking and the people behind it and their larger agenda. And I'm afraid this is, I actually did quite a, I don't want to say seminal update to the community that I was just referring to just before we met, but I think the next deflationary crash is when, you know, there's a big reveal of the extent that we have been universalized, regardless of what nation state you live in terms of where things are going. And the ability to arbitrage a better existence out of this planet is going to be greatly removed. So that's quite a strong statement. I think the next, we were talking about the yield curve, because part of what I was doing, people that are here for crypto are going to ask, so what about Bitcoin? What happens next? And I mentioned to you, I'm slightly on the conservative side, and that's what your audience is going to know. What about Bitcoin? What next? And also the alts are even overperforming. Bitcoin dominance is rolling over. And we have a lot of charts that we look at and that we analyze, and they never give you the 100% answer. They give you probabilities and minor edges to make slightly better decisions and possibly get certain timings a little bit more accurate and more useful. And one of which was, I'm actually looking at the debt markets as to why it might be good or bad for Bitcoin. Yeah. And to average crypto people that have not endeavored into the other traditional markets, that it's their first rodeo crypto, they might say, oh, who cares? You know, crypto's awesome. It's changing. You just have to buy and hodl. You just have to do all of these things. And unfortunately, macro recently has spoiled crypto for a lot of people. Everyone was on the 4-year cycle. Some of you were mentioning it's all about the halvening cycle. This is our game, as if this was a totally secluded little bubble that could totally coexist. Instead of being a child with an umbilical cord to a mother. And if the mother gets sick and eats poison or snorts a line of cocaine and a glass of wine, the child gets jumpy and fidgety in the uterus and might have carry some of that toxicity.
Yeah, you mentioned, I mean, you mentioned so much there already. You mentioned March 2020, which I think was an unbelievably significant event, not just in the crypto space, but markets generally, because what, by Jerome Powell's own admission, the Fed and many other central banks did around the world was flood the system with money. We're now almost at the fallout of that. So things were hunky-dory for 2 years when we had all this stimulus going into the economy, and now we're on the other side of that. And you mentioned about not being an emotionally driven trader, not just being there for the ups, but also the downs. And even myself, 2021, we were very much following the Bitcoin 4-year cycle theory, and things have just changed, and it's become increasingly apparent that your cryptocurrency market is now very tethered to your traditional world.
Absolutely. And as the market cap has gone and the involvement of institutions has become greater, this is going to become more the case rather than less the case. And most of crypto, for which crypto is their first major investment category area, weren't prepared for this. We tend to not see things as contingent on other things. And that in actual fact, we've been running a debt monetary system that's at the end of cycle. And that the blockchain and tokens probably is the model case for the new financial system that will replace the one that they will be finishing off soon. So in my opinion, you have a sickly old man and they've got him by whatever's left of his hair and they're ready to slit its throat soon. And this is being orchestrated and controlled. What people think of as random is far more has actually been overtly managed by a group of people. And some people go, oh, you're a conspiracy theorist. Conspiracy theorists are people that are a couple of things. They don't believe proven liars to start off with, and they recognize patterns where there's consistent pattern behavior. And that to me is a rational activity. It's not the activity that is portrayed as a tinfoil hat loon who's always waiting for a piano to fall on his head. But it is just rational, dispassionate logic at certain things. How can all these events be so randomized? So if you're killing off a multi-cycle since 71, in fact, we also passed the 50th anniversary last year, by the way, of the 1971, which was the end of any form or any pretense of sound money, which followed the military-industrial complex endeavors in Vietnam, which was carpet bombing of jungle, Agent Orange, every chemical warfare. Nuclear warfare was, of course, in end of World War II, all of which perpetuated by the West, although we continue to accuse everybody else of these sins. So it's very easy to have a different view of the West if you actually live in the West. Other people that when we live in the West, it's quite hard to actually see that we are, as much as anything else, the great Satan in many ways, whilst thinking we're the good guys. Anyway, on that point apart, that was gold being removed because people just saw the scam and they started to ask for the metal, not the paper. And that was sound money, and that was logical. They were applying a rational conspiracy theory, saying this country is undertaking endeavors that is requiring an immense amount of funding. They aren't acquiring any new gold, yet they're clearly printing more of their paper. As a result, I think the paper is worth less than the gold because they're diluting me. I'll take the gold, thanks. And the French were there, and the nation state started to ask for it, and eventually they closed the gold window. That's to say, hey, we're going to cheat. We can have a fiat floating system where it's tied to nothing, and we have essentially a major debt. And what they've then put is a succession, the biggest criminal of all, Alan Greenspan, that inflated the hugest debt bubble on the basis of globalization. So this is going to come back because we're now on the antithesis. This is the yin and yang, the black half and the white half, with the little white dots in the black half and the black dots. It's total. So because we outsourced, when we had these global multi-corps that outsourced to the lowest cost of labor, we had artificially low inflation. They could pump more money to create an asset bubble without having runaway measured inflation. They still were creating way more inflation than they were stating. So there's deception. Remember, if you're running the game and you want to keep slaves and want to stay masters, you have to make sure that people don't have the information you have. One of the best ways to control a disproportionately large population compared to your inner cartel is to keep them well misinformed. So deeply not informed is probably the easier way for people to understand. And that is actually what's going on. And then to control the levers of the system. It's one of the reasons why the true effects of inflation as a taxation on the middle classes and especially the poor are not told. So this current inflationary environment is absolutely explosive, and it's to weaken your purchasing power. The only people who gain are people that have exceptional debt pools that are lent at really low amounts, usually oligarchical megacorps, who can, a bank, instead of doing hundreds of thousands of little loans to an SME for £10,000 here, $100,000 there, just loans 10 billion or 50 billion to Coca-Cola, for example, or to Microsoft, for example. These are many of these companies are quite highly cash generative, but then they buy back their own stock, and it's all about financial engineering. So Greenspan sets off a massive trend of financial engineering and globalization so that they could create an asset inflation bubble without prices moving up yet. Because who got the money? The people that bought stocks, the big investment corps and the mega corps that could do buybacks and do loan lending. You didn't get that money. As someone in the UK, for example, you probably still face 16.9%. If you've got a dodgy bill against you, you could pay 30% on a subprime credit card. You don't get cheap access to credit, because to do so for the little man is not the privilege. The real privilege is super cheap lending. So these oligarchs that borrow money, they devalue the money, therefore they're killing the debt. They borrow at supremely low rates. Remember, the Fed supposedly reining in inflation, which is at 7.9 on their numbers, on shadow stats is 16%, increased rates by 0.25. That's a bit like you missed your train there, your Thameslink train on St Albans Station in Hertfordshire, and it's pulling out, and you decide, I'm going to catch that train, and you jump on the tracks. and you saunter for 5 strides, and then you have a sip of your schmuckbucks coffee, and you sit down for 5 minutes, and then you take another 5 steps, and the train is now going at 40, 50 miles an hour, and it's gone. That's not a sincere effort to rein back inflation. This is the hugest difference between real, their quoted number of inflation and actual rates. We should already be close to 10% in rates. Why aren't we? Why? Because it's an engineered benign neglect that is through intent, but they're going to pretend they got caught out. So you get this pseudo-intellectualism where I recognize all the different avatars. People say, well, the Fed doesn't know what they're doing. Yeah, man, there should be, I could do a better job, you know, and they try to get you to believe. No, you don't understand what they're doing. They're doing exactly what they should be doing, pretending to do one thing and doing another. They know, every one of them knows, oh, but their models are crap. I could do better with an Excel spreadsheet. This is like, they want you to feel the superiority, because then you just think it's incompetence. If you think it's incompetence, you don't see orchestration. And this is another psychological thing. What does this all got to do with crypto? Well, we run a debt-based system. We're in a macro system, and we're in the end of cycle of a far bigger financial Ponzi scheme than crypto's market cap by umpteen multiples. And when the, when the elephant in the room swings his tusk, we all sweat a little bit. We're all in a phone box with an elephant, and this is macro. And it doesn't matter about your halvening cycle. If Klaus Schwab and the World Economic Forum that have already drilled for a major bank hack decide to visit a massive bank hack, thanks with the Israeli partners that were leading that drill. Don't forget, they drilled for a pandemic in September with Bill Gates, and then you got it. These guys have an amazing forecasting record. You'd think they almost had some inside information. You come to your own conclusions on that. But the point is, if they're reiterating for the umpteenth time that now Russia is going to maybe make the war no longer just a hot war, but is going to try take down infrastructure in this wild revenge against you. They've already given you the patsy, the bad guy that they're going to be putting the label on. They're already decided the outcome they want. Problem, reaction, solution, the Hegelian dialectic. So there's a lot going on here that most people are not reading. Now, if they do a hack and the things get zeroized, well, what happens to stablecoin? You know, it's got a lot of treasury notes in it that are all losing value, a lot of money in bank accounts that could be zeroized. What confidence do we have then? You get a huge deflation. So suddenly no one has money. What happens? People sell the liquidity. You can try sell your house, but who's going to have, if you live in a nice house, 500,000 pounds in leafy suburb to pay? Well, there'll be no banks lending to you because they'll all largely be zeroized and frozen and locked down. Where lockdown's the new reality, it seems. This thing that's been sold to you as libertarian isn't. Bitcoin is online banking, open source. Basically, anyone can track who gets what. So your freedom is being taken away from you. So don't evangelize about it on a liberty basis. And I was saying this in 2016 when people was going, it was deeply unpopular because everyone was maxi, this is it. We're going our own way, new freedom. Doesn't sound optimistic message what I say, but unfortunately, the best way to control an outcome is to control the opposition. And in this case, Bitcoin is being presented as the opposition to banking. Everyone, Bitcoin fixes this, Bitcoin fixes this, Bitcoin fixes this. You know, even the hashtags are being created. It's almost like there's a marketing team behind it. Hold on, it doesn't fix everything. It has some frailties. People can see how much money I've received for one. I'm not sure I'm so happy about it. So maybe Monero is better. But then you look at Fluffy Pony, who had a commercial dispute in South Africa with a previous job where he bought something. And next thing you know, the FBI are grabbing him when he's just doing some random travel in America to attend a conference. Well, hold on. Maybe they want to know a little bit more about what's going on in secrecy coins. What isn't captured is the question you end up asking. But some of you just say, help me just make some money. I don't care if it's all their game. It's such a big challenge. What do we do? Well, here's the problem. I'm relatively conservative right now. I didn't trust Bitcoin's price structure. In fact, we still thought there was a chance we would go down. What's happened is, and I'll share a couple of charts, and these are all macro events that have been happening. And one of the things we're seeing is this is an end of cycle event for debt. This is a US government 10-year yield. I've gone a little bit of the way back. In 81 over here, let me just move that out of the way. I've got my handsome face and your handsome face in the way there. So 15.94 was the interest rate on the 10-year in 1981. That was the last semi-serious Federal Reserve head. Faulkner killed inflation, and he had to raise it immensely. I was a very young kid then, and I remembered at school how it affected us. We weren't allowed to do certain things. We weren't supposed to buy certain things. There was a global fight on inflation, you know, and we'd also had the first OPEC meeting and effect, which was the oil crisis of the late 70s into the beginning of 80, and then of course gold ran. And then they killed it all the way down. Now, inflation around that time was 14, 15%, I think, or maybe 12 or 13%, and they had rates at about 16, depending where you were, US, because we're talking about the dollar as the world currency. Now we're probably at 16%. That's what Shadow Stats has on Ronald Reagan, their own statistical measure that existed in 1982. So this isn't like he's sucked his thumb and said, no, I'll just 2x whatever they're claiming. This is utilizing the Bureau of Labor of Statistics measure that they used to use. But of course, they swap things out. Things that go up too much, they swap out. Deflationary things like computers and that get more powerful, therefore you're buying a better product. So it's not all inflation that your replacement laptop is 30% more than what it was. This is a trickery, a lot of statistical chicanery. They talk about lies, damn lies, and statistics. You can, depending on how you play the game, you can get stats to say anything. And theirs is not one of sincerity. They know this is the route they're playing. This is how you hollow out the masses, and then the wealth is held by oligarchical class. So this final capitulation, this is log scale, that's why it looks so big, is typical of how trends end. We've called an end to the 40-year bull market in debt, which was rates continually coming down and values going up. They have an inverse relationship. That's all you need to know. I don't want to bore. Is what tends to happen in macro cycles when things end. Why should a crypto person care? Well, it's the end of a debt-based system, which is also the reason why a couple of years before, after the great financial crisis, they took this final leg from 09 to where I think our reset is for real. And I was literally saying, at the risk of sounding, this time it'll be for real. You know, many people are cry wolfers on this, but this time I think they're going to take the whole banking system down, and we're going to get universally put in, and a large amount of what we suspect is going to be revealed. So this is the end of the debt system. Now you might say, but it can go the other way, all the way up to 15%, can't it? Like it did on the way down. No, it can't, for a simple reason is you've loaded up on debt ever more on the way down, and the interest payments are absolutely vast. So there's actually quite a small amount of America's budget. We have to talk America a lot because of the dollar being the global standard on currency, but there's a very small, and it's very similar for most other nations. So what applies there, that's the other thing, by the way, we're all lepers in a leper colony. It's been globally synchronized. No one said, hey, I'm not up for this. I prefer sound money. No, you can see, and this is another reason why the synchronization of mentality that has occurred is conspiratorial. Anyway, so the point is, you've loaded up too big a handful of debt. It's trying to grab all the sweets in the sweet jar. You can put your hand in and just about get it in and grab one sweet. If you try to grab the whole jar on your hands like that, it doesn't come back out. And think of those sweets as poison pills of debt. You can't come back up in interest rates with that amount of carry because the interest rate. So America's budget has about a third of it would be taken up. It's discretionary. In other words, most of the budget is already allocated. Defense, this, that. Things are done on contractually long basis. This notion that a president is deciding each year what's going to go there and how much flexibility he has is absolutely not. The permanent government has already pre-committed vast amounts of money. So the discretion that's left, that actually can be day to day, is quite small. It's a bit like somebody who's living in London on $3,000 a month. Your rent's about 1,800, your groceries is about 700, your car and your insurance are about there. You've got discretion over 100 quid if you're lucky, if you're in that set of circumstances. And that's the difference, but also it's the same for a president. So if the rates just doubled, you'll go well past a third of all his discretionary spending is just going on interest rate serving him. And if you take the tax receipts, it barely covers 50% of that which has to be paid in interest. So they are adding debt. Every other item that's spent is debt-based. So imagine you're living continually, your entire salary only pays half your credit card payments. And you're paying the other half of the credit card payments by taking out new credit cards. So as you can see, that
it's a mess.
At a singular individual basis, that's very clearly non-sustainable. But if you're controlling it and everybody else is doing it and you're printing it up and you're the host nation, you can do it. Anyway, back to this chart. That's the end of cycle for us. We called this in May of 2020. We said this is going to turn and it's the end of the debt cycle. That means it start going up. But the problem is it can't get to that level of rates anywhere near. In fact, already where we are here, but don't forget a large chunk of the debt, I think they did in and around 7 trillion of commitments. How much actually got spent in that point was added here at very low interest rates. So right at the very lowest point of cost, you added some of the biggest amounts. This was far beyond what the great financial crisis, initial QE and all of that. These numbers have just got exponentially bigger. And people go tens of billions, hundreds of billions, trillions. Who cares, 7 trillion? No, they're huge. I always say this, and I'll say it super quickly for people watching, but if you had to count to 1 million and you said one number every second, and I didn't let you sleep day or night, and you had to count, that would take you 12.5 days. To count to 1 billion, that's 1,000 millions, that's 32 years.
Wow.
And to count to 1 trillion is 32,000 years. So to go back 32 years, you would spend a third of your life, if you were fortunate enough to live to 96, you'd spend a third of your life counting nonstop, night, day and night. If you actually slept half the day, you would take 2/3 of your life just to count to 1 million at one number a second, doing very little else. You wouldn't be able to have any other conversations during that time. So just think of the scale of that. Imagine 32,000 years. That's a single trillion. Well, these people were adding sixes and sevens. The numbers are just ridiculous. So people's minds glaze over. It's too big. It's non-quantifiable. It's not visually conceptualizable to most minds. But it's a very real situation, and it's a very real number. So what does that mean in terms of, again, we haven't spoken a great deal of crypto, and people watching this will be getting frustrated. Talk to me about crypto. Well, the problem is we've just had what we call a yield inversion. And if I just open up this app, I think it's one of the last pictures I took of a yield inversion chart. This is what happens. What is it? What is a yield inversion? I'm going to give you the short bluffers idea, because people don't like debt markets. They don't understand it. People understand equity, Coca-Cola, Tesla, Microsoft, because they're companies they engage with. They're B2C companies. They bought a product. They understand how they make money. Bonds, they don't buy. They don't understand. Well, actually, you're stuffed with bonds. If you have a state pension, you're stuffed with bonds. If you have a SIP that isn't managed by you, so it's a self-invested personal pension, you should do that. Get a self-invested. Then you can steer it away from bonds. But if you have a managed portfolio with Norwich Life, Standard Life, Friends, Provident, or whatever the case may be, they are massive buyers of government debt. They decreed to do it because they own this asset. It gives them a certain income, and they pay the pensions out of the income. So they own a block. But the problem is these things are losing value. So yield inversion is when longer term debt's interest rate is lower than shorter term debt. So when you borrow long, like a house mortgage, you should, at an institutional level, remember this doesn't apply to us, your credit card rates are crazy. But if you borrow long as an institution for 30 years, there's going to be a compounding effect of some inflation. You pay a higher rate. When you borrow short, it's less high. What happens when the market is deeply concerned about the economic stresses are around is that the short-term rates are the same or even higher than the long-term debt. So people don't see inflation, they see disinflation. They see assets shrinking, less money, they see things dropping down, they don't see the ability for things to get more expensive. They see decreased buying power in people and spending less. So that is a real recession indicator. And I'm going to just show you economically macro events. Early 90s, we got a recession. There was a yield curve inversion. Then the first little warning sign round about 98 coming in, and then the major one in 2000 for the dot-com boom, major recession. Now in America, that went for 3 years and saw George Bush Sr. thrown out. as a bad custodian of the economy. So it's all about the economy, where people vote on the economy generally. If they're feeling good and they're rich, they don't rock the boat. If they're pissed off and they've lost money, they rock the boat. The Great Recession, now that is a ridiculous state. It was absolutely a depression, and no one understands what the definition of a depression. It's 2 years of negative growth. Everyone knows a recession is 2 quarters. It's 2 years of negative growth. The UK cheated to get 0.01 on 1 month out of the 2 years that you had negative growth in the UK. And it's also contingency, a substantial bank failure. That was absolutely all the criteria was met, but for the shenanigans of statistics, we went into a depression. The subprime crisis, where we reinflated. This was all the beginning. Greenspan was part of all of this, into Bernanke, into Yellen, etc., etc. So this huge, called the Great Recession, actually a depression, also signified. You started to get the first warning signal round about here, late 6, early 7, and then you started to come out of it before 2008. That means it was already, it comes. Now it's a lead indicator. So it comes before the shock event. Now, we had repo market problems in 18 and 19. Signs of weakness pre-COVID crisis. COVID was absolutely needed. We had real issues in the money lending market between banks. Again, repo market, confusing. People don't know what it is. They don't care. They retail financial. It's important plumbing in the macro financial system that was breaking. That's all they need to know. But essentially, banks didn't want to lend to other banks because they were all expecting, again, a bit like the subprime crisis, that the others might not be able to pay it back. So people couldn't get short-term overnight borrowing, which is usually provided from one bank to another, because people felt unsafe and the rates started to spike. The Fed had to step in, offer money and back it, so that fear went away and say anyone who borrows in the repo market will be made whole. More guarantees for a failing system. So this was a lead indicator that ended up giving you the March 2020 events, which is why, another reason I say it was orchestrated. They needed it to happen. Why? Because they needed to pump trillions into a system that was running out of liquidity. And it also gave the martial law. Many useful agenda was advanced under this medical event. Up you go. And now we are absolutely throwing it down. This is one of the fastest rates of decline, and the cycle is shortening. So you get the event in September, October, and then you get huge deflation subsequently as you get the warning of the inversion, and then you get a couple of months, and then you get the event. All the risks are to the downside. So coming back to the question of crypto, because this is a lot of talk without much charts on crypto. Coming back to the question of crypto, if there's going to be a shock deflationary event, you've got to be real careful about wading in long now. Now, I'm going to be wrong about being conservative now until maybe later, suddenly very right. How long, once you get the signal, will the event occur? My opinion is these events are getting more and more compressed and more to the downside. So in other words, the volatility is quicker. It's quicker to the punch. It used to take longer. Now it's coming a lot faster. And what's happening? You've got a war. You've already had the bad guy fingered. Russia might target infrastructure on hacks. This is all a perfect way to kill everybody's money and bounce them. Hey, we need a new contract. Guess what? We'll give you UBI. You had a pension, but the debt's worth shit. Sorry about that. Guess what? You can be rolled up into the UBI scheme as well. You're the old guy in the UBI. Don't forget to show up for your booster. Let's see if we can knock you off and take you off the grid nice and quick. We created this cool new token, shiny object that is guaranteed by the US military, the New World Order military, whatever the case, the narrative they make. And as a result, you get a substitute. So everyone, the contract gets torn up and we start again. And that's very convenient because they'll lose all the things that have become untenable without making you whole. And it'll be a massive leveling event, but it'll be in stages so that you don't realize how it is. It's kind of like when they introduced the euro. Everyone got a cost of living increase passed on to them. But they said, this is good for you, all the spin, all of this. Next thing you know, Italians are complaining, all their stuff costs more, everything costs more. It's a nice little segue into a new game where actually it comes out the other side and the man in the street is hit. So this isn't good. And if that deflationary event, it could be 6 months, it could be 3 months, it could be 3 weeks, it could be 3 days from now. If that occurs, how did we do on the last one? So let's go to the first crypto chart of the day. Bitcoin, and you'll probably remember this, everyone remembers it. I was like, wow, that is a spiller all the way from Manila. It's an absolute thriller. We were once at 14,000 on a localized high. We talked of the first cup gold nugget. It was one of our favorite. We said this is going to be the best period to be long crypto during this period. So we're talking about this. This was a 2.5-year continuation pattern. You got your little break and feign, and then you went up. This was the cleanest, easiest time to be leveraged long. I don't think that's the game now, albeit Bitcoin trading up. And it could get up somewhere here. It might even get a little higher. I don't think it easily makes a new high, but this technical structure doesn't impress me. A marginally higher high there. Don't forget, we're getting a little bit of a rest on the dollar, and most of this Bitcoin is on the resting of the dollar. Fiat currencies generally are weak, dollar, euro even more so, and then the commodity currencies are actually firming. So you've got the Brazilian real, you've got the rand. These are dodgy currencies, but they're commodity currencies. They're actually firming. Australian dollar is the strongest of all the FX pairs. So if you have a look at Bitcoin in the Australian dollar, it doesn't look quite so positive on the near term. So Bitcoin's getting a little bit of currency effect on it. And that's what many people didn't realize. They thought it was all about Bitcoin and crypto. It's a pair. It's about the fiat system. Normally, the fiat system is far more stable than the crypto because cryptos are high beta and highly volatile. What's actually happened now as we're getting into the end of debt seed is we're seeing a massive swing. The real traditional market trade is short debt, long commodities, and we're seeing it in the CAD going up, the Aussie going up, the Brazilian real going up, and the South African rand, which also pulls stuff out the ground and grows a fair amount of stuff, going up. You're actually seeing weakness in the euro, substantial weakness. The euro is our pet favorite for downside against the Swiss franc. We're seeing weakness in the yen. What's about Japan? Japan majorly indebted, terrible demographics, they're all old. And the Aussie is the strongest. Go look at the Aussie Japanese yen chart. It's super strong. We've given it to everybody. So a country that's long commodities at the moment is actually doing well in its FX reserves. So Bitcoin is married or measured against an FX, but it should be also measured against other things. For example, Total 2, which is generally the alts minus Bitcoin, or Total 3, the alts minus Bitcoin and Ethereum, should probably be measured against the NASDAQ, because it's largely venture capital viewed. That's how the institutions see it. It doesn't matter how you see it, because you're a penny and a dime investor compared to these guys. I'm a penny and a dime. I'm not knocking anybody here. We're all small tadpoles in an ocean of whales. So the institutions see alts. Your best benchmark will be the NASDAQ. So again, if I put, let me just put this monthly chart on and you can have a look at where we are now. The thing that hasn't impressed me recently is that we've battled to get through the 46. I think that will happen because of the fiats being weak. But I don't want to just be, it's not crypto being super independently strong. It's not Bitcoin being super independently strong. If Bitcoin has a stab of weakness, the alts will be reined back. The alts are a higher beta. So a little bit of strength out of Bitcoin. We're getting Bitcoin dominance going down again. And I'm going to bring that chart in. Please let me cover that chart before we go, because there's some very interesting observations there. But here we go. So that looks great. But if I put it against the Bitcoin Aussie, you'll see it's a little bit more different. Many people will be watching this and say, I don't care, Bitcoin's still going to do better than the Aussie dollar. For now, yes. But you see, that's a red hammer. It's not green. You can squeeze a little bit higher, but we've really had an issue on the shorter time frame of getting higher. And it's this 46, 45, 46 handle. You've been knocked back. And this is not over-roaring strength on weak fiats. This is the level that I'm insinuating has been a very harsh area. Sorry, I'm still on Aussie dollar there. Those numbers won't make sense. Let's go back to the normal dollar. And I can leave the box in there. So there you see, run about from 43, which we're above, we're at 44 almost, to about 45, 46. We've been knocked back. Until you break that level and stay above it, you haven't really turned this potential corner. And the manner in which we're doing it is not super high momentum. This is not runaway power. It's not even a candle like this. You see that candle over there. We're bleeding up. It's what I'd call a bleed up, getting it up. So we are susceptible to sudden downside risk. There's a cautious, okay, are we back on risk on? This is deemed as a high risk asset class. And as long as fiats are going down, particularly the euro and the dollar is soft-ish against the commodity currencies, yes, it will be. If we get a shock, and they need to put money back into debt, debt is devaluing too fast. So we have major shorts on debt. So the key thing is long in the traditional market, as I say, long commodities generally. So that's uranium, gold, silver, commodity currencies, possibly to a degree, although I'm not a fan of currencies, but if you're trading currency to currency, Aussie dollar over yen, for example, all those things are doing just fine. But the real thing is that crypto is not independently strong. It's strong on the basis of other things being relatively weak. And the alts are stronger because Bitcoin is broadly doing a bleed up. So be careful about the optimism about what it is. And then that yield curve is racing down for an inversion. And on other yields, so you can also do I showed you the 10 and 2, that's the 10-year minus the 2-year. But you can, people do 10 and 5 and other debts. It's already got inversion on some of the other measures of yield curve inversion. So we're cautious, but technically short term, there's a number of alts that look pretty well set up. But the thing is, are you going to chase and get that next 20%? And will you get out in time before any possible major shock deflationary event? So I think conservatism is going to look wrong until bad news happens. And then it's going to look very right. So what do? Well, don't trade leverage long, because if it suddenly catches you, your stops could be slipped, not filled. You could get terrible execution. So leverage is a killer. Invest your blue pot if you want in your best setup alts. And we've got a few in our community that we're looking at for those that want to take the risk of taking a bit of money. You've seen Ethereum do a bit better than Bitcoin. It's kind of reinflating a little bit too, but it's totally reliant on it. This is a little bit firmer an up move, and that's a little bit more convincing, but it's not a runaway market yet. It still has to get above its 3,250, and it needs Bitcoin, because now you've got another point of failure. It still needs Bitcoin not to fall. The value of trading Bitcoin over an alt or investing in Bitcoin over an alt is that inside the crypto realm, it doesn't have any other contingencies. The minute you trade XYZ token, generally, and of course there's been runners. For example, Luna was running even when Bitcoin was soft. There's always exceptions to a rule. There's no universal truths in this game. But generally, when Bitcoin was down, the stack was down. And then there'd be one or two outliers that had real special news, real driver events, and they were up. But you don't want to be too aggressive. So we've looked at a few of the ones for those that want to get in. It could be 6 months. It could be a long time to sit out, and you could do 30% on the alt. The point is, careful. The music is going to stop suddenly. You've got to stay close to a chair, while you're dancing, because a whole bunch of people are going to be rushing for chairs all at the same time. And that spells bad execution and collapse. And if you're going to have to get out, and others will think, oh, it's just a pullback. You need to be skittish in these times, in essence, because most of the risk is to the downside at the macro level.
Yeah.
Yes, blockchain's the future. Yes, crypto's the future. Yes, all that stuff. But they're planning, in my opinion, or there will be by random, if you don't buy into that, a major event that is being brought about by the fragility of the macro environment.
Yep, absolutely.
An example of one that we quite like, it's got a legal court case lottery ticket attached to it. And I think it's deeply involved. And we like it from a technical structure point of view. At some point, I expect this to go up really far. I'd like it to come higher first. But it's actually, and you've got to be dispassionate about it. There's a lot of people that, the minute you say XRP, they want to puke. Most tokens are now VC. A lot more are banker coins than you were. This was one of the early banker coins as it got labeled, and that's why people have belief systems around it. Listen, blockchain is open source internet banking by principle. So if to pick on one token, they've been courting the central banks. Absolutely. So I don't like them fine. But is there a chance it could go up? Does it have a good lottery? This is good structure for a go up, and it part missed on the last alt boom. So if that uncertainty gets lifted, you get a double runner on this one. And, you know, if central bank digital tokens run off this, it's going to be good for XRP. Make Huge. The money, you know, wipe your mouth afterwards if it's if the aftertaste is bad. You won't feel so bad if you're a multimillionaire because of it. And that's my viewpoint. So I deal with a lot of things that some people are this dispassionate rationale. They know what they want to do. They want the central banks. They want to be in the core of the system. If they're successful, trust me, they're going to do very, very well. And I don't think we can stop this process coming. You know, we can sit there. We want liberty, and all of this stuff. They're not interested in pumping secrecy. Unfortunately, secrecy tokens have done terribly. I've got a category that I watch. Monero used to be consistently in the top 10. Then it was number 15 consistently in the top 20. And now it's fallen out. And it's the vanguard of secrecy. But at some point, it could have its day, and I still think it could, and it could have a use. But is it compromised? We don't know. So there's lots of vagaries. There is no perfection. There is no idealized answer. Do cross-crypto analysis. This is a key thing we do. So look at your favorites. And then have a few wild cards as well. Look, the metaverse, it's already existed. They just branded it. But that's going to get bigger. This whole virtual environment is absolutely, you will own nothing and be happy. You'll live in this virtual world with buddies that you have shoot up games with, pay to earn. You're going to have transhumanism chips so that you don't have to answer your phone in your brain. I'm not a fan, and I'm not going there on any of that stuff, but it's coming. I'm going to look my age and maybe older, because I'm going to resist until my dying day. But some people, you know, it's just progress. It's just progress. They're of a certain age, and that's kind of where we go. But I don't think long run, that's a good ending for any of us. So I'm a little bit dystopian of view. That means I'm cautious at times, and maybe too cautious. Other ones that we've liked, that we've spoken about, Spotify for the blockchain. Find him, let me search for him. That is similar technical structure. So we like squeezes, and we trade the squeeze. We have a very strict set of criteria. I'm not going to bore anybody who's not interested in that, but you'll see there's something similar to that. It held a support level at the base of, if this is to be a relative low, for example, which there looks like it may well be, you've held that base, you've not run the previous low. And maybe I need a bigger time frame, but you could get a little bit of a rally now. You've had a good rejection off there. You could get a little bit of a rally. And again, that could be some form of a squeeze-based event. So there's a couple of structures, and we're looking at other ones as well. So you need to go up, maybe a bit down, and then you can go a lot higher, possibly. We'll see if that happens. It's possibilities. And we want to see the technical significance of it. I don't know if those are a couple of ideas, and that's where you want to steer me. But yeah, the key thing is, don't get caught when the music stops.
Yes.
So just in answering, how's it looking for ADA? It's quite a significant last few days or week, last 2 weeks. This was a very bearish event when it ran this localized support in and around 107. And what's really good about it is that it kind of flagged there a little bit. I'm on a weekly chart that's a bit granular. I just wanted to remind everybody it had done very well for people, obviously, from there. So if I just leave that and assume that everybody knows how well it did. It was one of the first, by the way, when we were out in SA in the recovery post-COVID. It was one of the early runners, because Charles had a lot of announcements and a lot of things queued up. And I think he's quite sincere about what he's trying to do. That's my overall assessment of him. That's a fundamental opinion, not a technical one. But at the same time, he's got quite a lot. He had a lot to deliver. A lot of it was, you know, academic papers. I think he's approached it quite academically. And people want to see action after a while. And I think maybe some of that action starting to filter through, and that's starting to pay well for him. But we call these grind lines. That was a terrible first structure. We knew we were in trouble there. You've got a secondary structure there. You've got another one there. This was post the 2.5 run up top here. It might even have made 3. I'm not sure exactly. And then down, 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 down. This was a broadening structure, which was continuation for us. So technically, again, that didn't look great. on a selling leg down there. So we thought, oh dear, you bounced again, you set up another broadening structure. This $1 understandably was very, very key level of significance. This is some of the theory that we teach in terms of interpreting the direction. We were, for example, very bullish on the break of that wedge. We were calling it. We expected a 3 impulse wedge. It's typical structure for us. That does occur. You got that rising wedge into there. We expected the final down leg. It came down. It stayed above the 1. That was a great period to be long ADA. And you could have had a bit of leverage in that because at that time, Bitcoin hadn't yet made the marginally higher high at 69. It was all bull go. More recently, that down leg, and then you seem to have based out. The 80 seems to have been a key level. You haven't held below it for very long. You had a wick spike there. There's been value buyers, and now you've got a good little run up. It's early doors to call all forms of reversal, but if you're a blue pot investor, it's certainly encouraging. By the way, this is I'll give you something bullish for your ADA fans in this. This is a little bit of a non-standard double bottom, and note how the 1 is the key level. You get a bit more of a rounded bottom here, which is typical of the volatility reducing, which is good. Lowering the volatility generally is more bullish. When you get skittish volatility, it's usually bearish. So when they say it's getting volatile out there, the talking heads on CNBC, it usually means the market's going down. So this is your double bottom that you've got, and there's a target that would be generated by that. I would take the key level of significance as 80, not the absolute low of that spike, and I'd run it up to there. So that's 120 is certainly on for ADA, and then a little bit more. You then start to reach localized previous highs at 125. What you'd ideally like to see is maybe an inverted head and shoulders at 125. If that's a neckline, we just draw that again now. So we drew the double bottom for you with a volatile 1 butt cheek and then a slightly more rounded other. What you wanted to do is to run 125, put a little wick through it, maybe have a little rest down and give you a right shoulder like that. Then you'll have left shoulder. You'll have the slightly lower double rounded bottom that we've already alluded to, which gives you the initial target up to the 120s stroke 125. So that would give you a target there. And then you get a new target, which is now all the way from 80 to 125. So that's about 45. So you start stacking 45 on 125. Everybody starts to feel a lot better about their ADA holdings. And before you know it, you're at 170 again. And then the same thing can happen. You get nestled inverted head and shoulders. So let me draw in a different color. You can eventually get, you move up to this level at 150. You have a new left shoulder there. This is all one big head that reverses back up here. You have a rest again. You have another right shoulder. So you're in a series of what we call nestling reversals that could take place. So there's a bit of assumption in here that I've done, but the probabilities of that happening are a little bit better than is normal. So you've got this evidence for reversal. The momentum is good. You smashed the $1. I think you'll carry through to the 120, 125 range. So your ADA guys are going to do all right. The question is what happens when that deflationary event occurs and how far away is it? And that's my biggest problem to answer. The concern for that is because it's not a crypto event, it's a debt event. It could be a day or two away. It could be 6 months away. The concern, as I mentioned, is that we were tracking the yield. So the yields, as I've already explained, go up when the debt goes down. We were tracking that and we had an upside target. So we've been in this trade. We've been talking about it. I'm not trading it per se, but we've drew this setup from there, 1.5, and we expected the rates to hit 2.384. This is all now materialized exactly as we expected it. So it's evidence of a rest. Typically, when you make a target, you then have a rest. That means the yields go down and the bonds go up in value. What causes bonds to go up in value? Fear. Everyone charges into the dollar and buys debt again because the market's crashing, stock market, NASDAQ, and everything. That's not a good environment for crypto. Even though crypto guys love to think they're totally independent, they're not anymore. Institutions become forced sellers. Institutions hold Bitcoin. They have to reduce across the board. If you're a forced seller, you've got too much leverage, you've got to get out. The valuations have dropped. Everyone's conservative. Even though you say, it's going to go up later, your boss taps you on the shoulder. Do you want a job? Okay, sell that stuff. and you've got to do it. So that's the slight risk. So I think after running this 2.384, this is actually going to pull back. That means yields down. That means bonds getting a bit of a bid back up. So we're going to be in a little bit of a counter trend rally. Long run macro crypto, but we have to see that strike out. And that's the key thing. I can't tell you when, but this tells me we're going to have a bit of a pullback. Could it be a big one and go all the way through this funnel that we've drawn here and come right down in a COVID? This was COVID over here event. It could be. It could be, you know, the 2-year anniversary due in April, May. I don't know. You see, my overall thinking is the Maxine story, the medical martial law, is going to come back in the Northern Hemisphere as you approach winters. So they need another, they need to keep you in turmoil. And this is the agenda of lockstep and everything. So the best time to do, and markets generally do badly, they talk about sell in May and come back on St. Leger's Day in the traditional markets. So the summer is bad because, you know, hedge funds and institutional people take holidays and the market isn't being bought up. People get more defensive, they go, etc. It's not, sunshine is good. So that's always been a cycle. So one of the best times to do some asset down valuation. And just to be clear, the problem crypto has is there's a chronically overvalued stock market. This is true inflation as well. People think inflation is just exactly. People think inflation is just the price of their bread and petrol. It's assets price inflation, and it is absolutely chronic. How much time before you get some element of downside revaluation? Well, one of the reasons it's got so far is because we have a global inflation. What do you do with your money? What do you do with it? You either buy cans of beans. Well, if you've got all the cans of beans you need, you filled your nuclear fallout bunker with beans, what do? Well, you try to invest in things that won't go down if it's a highly inflationary environment. Why is it an inflationary environment? Because the inflation is 8%. And you've just moved to 0.5. So you're actually losing 7.5 on their numbers, which is closer to double digits on the real numbers that you probably face. So when you're in that situation, you've got to put your assets somewhere. This is why we're a macro bull crypto. We're just saying there's going to be a strike because inflation is here. What happens with Bitcoin once they release CBDCs? I don't know. Will they let it survive? Possibly. Will they insist that you declare it, capital gains, all sorts of things? In other words, it's going to be totally captured like any other trading asset. And I think a lot of people's dreams of libertarian money will be smashed once they realize how statist everything will become in terms of your assets. Do not use leverage during this period. And we're people who used leverage on Bitcoin before for that first cup gold nugget, that 2.5-year continuation pattern, that beautiful era where you went straight up. This was our dream trade. This was really powerful trade for us. We were all ready for it as a community because of that. And we were able to ride leverage up there. Very busy chart. Don't try to understand it all. I can take the eyes off it, maybe giving an eyesore. But that was our big run up. That was a unique event. You had a 2.5-year. This is slightly more complex. I do think you're going to trade up until the deflationary event. I think you will then trade down. It could be quite brutally down, but after that, on balance of probabilities, I think you're going to be going back up and beyond. You have to be inverse to the psychology. You have to be brave now when everyone's a bit cautious, and you have to be cautious as people start to get brave if you intend to do this.
No, absolutely. Francis, well, thank you very much for your insight. I've learned a great deal myself, and I'm sure the followers that I have learned much. Some of this stuff may be the first time of them even hearing about it. So it's been greatly informative. Thank you very, very much for coming on the show, Francis. I'm sure hopefully we can get you back on the show at some point. Sorry, go on.
I can as well, Roo. I'd just like to say, people that like our cut of what we do, the Market Sniper YouTube channel You can follow us there on the traditional markets. You can follow us on crypto, the crypto markets. We were the only people calling single-digit oil going into 2020. We said be long gold during that period. We traded the Bitcoin, what we call the first cup gold nuggets, which was the real break that came really fast at us, which we thought was one of our scenarios. We've got a fair amount right. We will get things wrong. Real method for building investment gains and also defending it, because keeping what you make is going to be one of the hardest things. And that doesn't mean just money management in trading and investment. It means other things, getting into structures, arbitraging different nation states and their laws, not being totally extracted from by your tax guy. The website is themarketsniper.com. There's actually content you can see there, and you can book a call. We talk to everybody before we let people on board. We don't encourage fantasies and overnight sensations. You've got to build for the long term.